Hello, welcome back to Coinscrum's Meet the Founders series. I'm thrilled to be joined today by Campbell Adams, founder at Pure Digital. Hi, Campbell.
Hi, Paul. Thank you for having us.
Yeah, and Lauren Kiley, CEO at Pure Digital as well. Welcome, Lauren.
Thanks, Paul.
Well, thanks for joining us both. Keen to hear about what you've developed. You've had some news out in the last week or so, so we'll dive into that a little bit later. But before we kind of delve deeper into the product itself, we like to kind of hear a little bit more about how our founders, what they were doing before they entered the kind of whole crypto and blockchain industry. So over to you two.
Sure. So my background, unfortunately, stretches for over 3 decades in the FX business, in the top tier sell, buy, and vendor side institutions. Quite unique in the sense that I've got a sort of useful perspective on the 3 different drivers of the 3 different sort of components of the marketplace. But the bulk of my experience is from trading, from spot trading, FX in particular, in the mad 90s. So I've got a reasonable understanding of market structure and what's needed to have a wholesale market function properly from a trader's perspective, which is kind of key for a wholesale platform that needs to be tradable. About 10 years ago it was now, I founded the PowerFX multiple award-winning PowerFX platform. I designed it with a consortium of 12 banks. We all got together, sat around the table and designed a system of electronic trading that would be much more efficient, much more transparent, and raise the quality bar in the FX space. That was successful. It's up and live. It's live now. It's been live for 7 years now. And it's been very successful. As I say, it's won many awards. And then, fast forward to today. Initially, I was very skeptical of the crypto space. Probably the first time I met you. I might have even been skeptical then. But I finally decided to educate myself about smart money generally and the concept thereof, and became a convert. It's almost impossible to ignore the limitless use cases that smart money will bring the world. And this is the first step in this journey for the crypto industry. It needs to have a proper functioning market. So therefore I formed Pure Digital and brought Lauren on as CEO to help me out. She's the brains and I'm the old experienced guy. So I'll pass it over to you.
I guess similarly in a way to Campbell, I come from a traditional finance background. Been in foreign exchange my whole career. The bulk of it, about 10 years or so, was at Morgan Stanley. And I think I've noticed that it's kind of a little bit of a natural progression or rotation a little bit for people in FX to move into the crypto space. So I guess I'm one of those, but knowing Campbell and Jan, I've known them for several years. And I think it was a couple years ago when they approached me and explained the concept and the idea behind Pure Digital. And from the moment they explained it to me, I just fully bought into it and I was on board and I joined them.
Okay, great stuff. So, a lot of people, especially over the last year or so, can't move for stories about institutions stepping into crypto finally, having with the whole, trading ecosystem having grown out of a very retail focused kind of infrastructure. And now everyone's working out how do we kind of make this market, how do we kind of evolve this market to an architecture which is amenable to the institutions if it's not there yet. So that's what you've come to the market with in mind. Can you just tell us more about what that infrastructure looks like then, what you've developed at Pure Digital, maybe touch on the news that you announced last week with your partnership with State Street as well?
Yeah, sure. So, I mean, the basic ethos behind this is to try and transplant the proven and robust foreign exchange infrastructure into the nascent crypto trading environment. The word institutional is a bit of a problem for me. It sticks in my throat a little bit. I think it should be called wholesale, actually. That's what we're doing. We're introducing a platform for wholesale exchange of risk and price discovery. Both of those are missing at the moment in the crypto market. It is fragmented. It is retail driven. Most of the venues are very different in their setups and very opaque with regard to their trading interaction rules, matching logic, transparency with regard to who you're trading with, for instance. And also they've got a very big concentration of risk on the platforms. They do custody, they do all of the connectivity, they look after your money, they do margin, so it's capital inefficient, and it's kind of like what we're bringing to the table is a bilateral trading model proven for decades in the foreign exchange market. It's seen itself through many massive crises, of which I've traded most of them in the last 30 years. And it doesn't fall over. It's because it's bilateral. The credit is under the control of the user. It's not under the control of the third-party exchange. So we're unique in that way. So it's the first time that the user has control over its jurisdiction that it can trade with. So if for whatever reason you can't trade with Korea as an area, then you can just dial that out of the system on your terms, because it's a bilateral thing. It's a mutually agreed trading relationship, and then you can see each other trading. So yeah, it's all about raising the quality bar and bringing the FX infrastructure into the crypto world.
Okay, and Lauren, perhaps can you touch upon how you go about kind of bringing the relevant counterparties together? Because without any counterparties, I guess it's just some technology. Can you tell us a bit more about that? Maybe leveraging from some of what Campbell's previous experience he did with Pure FX.
Exactly, Paul. So Campbell, having done this before, he's got contacts at all the top tier banks, and I think he went around kind of in the early days to make sure there were enough of these banks that would be kind of willing participants in the initiative before starting the whole thing. So definitely leveraging that. And I think in addition to having all those bank contacts, I've got bank contacts as well from the world I come from, but the buy side as well, because, there's more and more demand coming from them. So we're speaking to the buy side, and they then kind of push or put a little bit more pressure on the banks to start offering crypto.
Okay, and then again, when you're getting going, again, comparing to some of the retail exchanges, there is significant liquidity on those venues now, and you've got to kind of sway the market makers as well out there, liquidity providers that are servicing them. How do you start growing and building your liquidity? If the banks haven't been in the market before, if they're new to this, what does that look like in terms of growing that part out?
That's a good question. From my experience in the very mature FX market, growing liquidity is quite a challenge, but it's very initially you have to rely on liquidity providers, market makers. Ultimately, you don't need them, but you need them to start with. So there is certainly a very full pipeline of interest market making or onto an environment like ours, in particular through the prime business FX market business model, which we are adopting. So they will already have a long-standing relationship with their FX trading bank. They will just add another page to their ISDA, and they'll be able to hook in directly into direct market access, trading in the name of a bank with their name divulged on the ticket, and everyone sees each other. The credit relationship is still kept between the bank and its customer. There's no disintermediation of credit relationships, which is a really important thing for the wholesale market. The minute you get disintermediation, then their fiduciary duties with regard to how they interact with a marketplace breaks down. And we have a situation which we have today is where like pension funds, real money funds have got significant underlying clients cannot actually access the crypto market because of the structure of most, in fact, all of the exchanges out there. So we're not an exchange, we're a marketplace that is compliant, regulatory, which maybe we can go into a little bit more about regulation in due course, but we're just trying to make ourselves as look and feel the same way as the wholesale FX market.
Sure. Okay. So you made an announcement last week, which I mentioned earlier, in terms of partnership with State Street. Can you tell us more about that?
Yeah, sure. So we have partnered with State Street. State Street's CurrentX, we'll be using them as our tech provider. And it kind of felt like a perfect fit to us, really, because they're one of the top providers in the FX space. They've been around for decades. All the banks are already connected to them, and much of the buy side as well. So yeah, we've already built out the tech. It's ready for testing, and in addition to that, they've agreed to explore the digital asset trading space with us. So as part of the initiative amongst their peers.
Okay, and is that something because they have seen demand grow amongst their existing client base?
Yeah, I would say they have. I think all the banks we're talking to have spoken to that recently.
Okay. Yeah, I mean, that's what's changed over the last 2 years. From when we first started this adventure, the conversations have really developed, and I think mainly because of the pressure from the user interest coming through the banks.
Yeah, and what about their custody side? I mean, obviously, State Street, well known as a global custodian. Is this an indication of a first foray into that part of the market as well? And will ultimately is the vision that their custody solutions will play a role within this model?
I think so. I mean, the custody model is obviously fragmented, and there's lots of custodial solutions out there. I don't think very many of them are institutional grade anyway. But if you have a big balance sheet institution like, a big bank like State Street, amongst others, being custodians of crypto, then I think that it's absolutely the case that the wholesale market will be much happier with that. We would likely encourage and likely see the proliferation initially of banks doing custody. Because it's a valuable service, but they're very well positioned to do it because they already do in financial instruments, and they're not a technology company that just does that one thing. So I think the key is the balance sheet behind it. Even the concept of insurance has probably disappeared as well.
I would just add to that, Cam. I mean, we're custodian or custodial agnostic. So whether it's State Street or any of the other banks that are joining the initiative, it's not that we're only going to have one custodian on the platform. We're open to anything that's bank or bank grade, wherever the demand comes from the founding banks that join the initiative.
Okay. So just going back to something you touched on earlier as well, Campbell, on the regulatory side, obviously, again, it's been evolving quite rapidly, I think, over the last year or two. Yeah. Some more clarity coming out in Europe. The US seems to have kind of moved forward quite a bit. You're based in the UK. Is that where you're domiciled from a regulatory perspective? And if so, what does that mean, or where are you at in terms of regulation, and are you free to get moving as you need to under current regulations?
I think it's early days for the regulatory environment. The UK seems to be, for me, the best place to be, given the new freedom recently from Brexit, for instance, and also with Rishi, and the Chancellor is very pro digital space. I even announced today Bitcoin, I think, which was all of the press. Bitcoin, yeah. So Bank of England, CDBC. So we'll be looking at central bank digital assets trading on our system as well, and stable coins as well. So I'm getting off subject a little bit there. But with regard to regulation, we have applied for FCA registration. But certainly in our DNA, from the business model and the financial sort of structure, the market structure of Pure in the FX world was very much driven by input from the regulators back in those days. So the DNA is transferred across. So the way we've built it, we look like an MTF actually, and regulators will be very interested in our business model and probably would welcome the initiative. It raises the quality bar, but also makes everything transparent, open, and legitimate. And I think that's kind of key with the regulator. This is one of our advantages, I think, because we'll have an environment of highly regulated trading entities in a transparent, proven business financial markets environment.
Okay.
Yeah, we're kind of giving the banks a vehicle to address the regulators as a group.
Yeah.
In the format that the regulators like.
Yeah. No, that makes sense. So, with this, I guess, being the first step, and as you said, you've designed this so it's really as plug and play as possible, and as familiar as possible to to your the bank participants that you'll be engaging. But what about thinking a little bit further forward? Working with State Street on their technology, but as you said, speaking about programmable money here and the future opportunities. I know you're funded by Arcane Crypto out of Scandinavia, and their investment strategy is quite broad around infrastructure in the space. What do you see or envisage coming next, where you think, maybe looking back to your previous pure FX days, but also what is interesting you most about the opportunities going forward, where over time you might be adopting some of the new technologies?
I think the fact that we've got great experience on the team. We've got advisors, I'm sure you see on the website, with over 100 years between us all. We've seen it all, done it all in the FX world. We've got great contacts, and we can see stuff that's good, and we can see stuff that's not so good, and very clear when it is, and very quickly clear as well. So that's good. We've got that advantage straight away. We can put the wheat from the chaff very quickly. I think the problem with the crypto market is there are so many perceived solutions, exchanges, everything out there. It's a bit of a mess. It's very hard to see where you're going. So I think we're very well positioned for that. Looking forward to, we've got good relationships. We've already selected quite a few of the infrastructure players that we need. This whole concept is about building from the ground up. We need to have all the elements of the trade cycle ecosystem, for want of a better word, in place, and the best next generation stuff. So the connectivity, the credit control, the market data. I mean, that's something we haven't really touched on here, but market data is a big problem with crypto, without doubt. With Mr. Saylor saying it's garbage, it's really hard to trade. I mean, as a trader, I did try and trade on a couple of platforms and found it impossible. There's no reference rate.
Yeah.
There's very smart companies out there that are doing good stuff with market data as well. So we've already shown interest with them and come to partnership agreements. So we've built those foundations. We're ready to get the house up now.
Okay, and so I mean, some companies in the space, I guess prime brokerage has become quite a hot topic over the last year, and I guess compared to traditional markets, it's a step in the right direction. But do you think that is the right model in the crypto space right now? Or do you think maybe some people are going down the wrong path on that front in terms of trying to consolidate the market in that way?
Well, with regard to prime, I mean, Lauren, you could...
Well, yeah, I mean, I think I can just quickly say, I mean, the prime brokerage that's out there now, it's not big bank, big balance sheet prime brokerage. It's more of just kind of aggregation, if you will. Yeah. So I do think that the market is missing the big balance sheets.
Yeah, I guess, yeah, I think I tend to agree, really. It's kind of more of a connectivity issue at the moment, isn't it?
Yeah, which it definitely helps, and it's made things easier for the interim, but it could become a better, more efficient market if the banks...
Yeah, no, absolutely. So, what's next on your roadmap? Where are you at exactly? You've got the relationship with State Street in place. You've got regulations underway. What's the next 3 to 6 months look like for you guys?
Sure. So we have signed, or in the process of signing, letters of intent with a few banks. We'll continue on with that. We'll keep testing the technology, and we should hopefully be ready to launch it the second half of this year.
Okay. And in terms of, I mentioned your investors earlier, are you kind of fully funded as much as you need to be now? Will you be raising money again?
Yeah, we're funded. Yes, we are. We're still a startup, obviously, but we're not going to make the classic mistake of being overfunded either. I think it's important to get the right people involved with the investment of only. So we're proposing the same model as we had before with the FX, where the users, partner banks, will become invested in the platform. I always find it a better system that investment in a product that you consume means that everyone's intentions and motivations are aligned. Mm-hmm. generally works very well as a business model going forwards.
Yeah, tried and tested model, I guess. So
yeah, I think it's it cuts out lots of sort of, what's the word I'm looking for, frictional middlemen. We end up with we can see ourselves as like a utility company almost, or like a service, which is what a marketplace should be.
Mm-hmm.
We should be the conduit for exchange of risk and price transparency and price discovery. When we get our aim will be to have the reference rate in all the digital currencies. So from us, we'll cascade the market data into all the other venues, the same way as it does in FX. I mean, in the 70s and 80s, FX was a bit like what crypto is now. It was very fragmented with lots of voice brokers with lots of different prices. And there was lots of arbitrage going on. I'm old enough to have done that for a little bit. And there's huge amounts of arbitrage opportunities. And that's kind of the sign of an inefficient market. The more arbitrage you have, the more inefficient the market is. But when electronic, price discovery ended up getting compressed and resided on just two key venues. And this is kind of where we're aiming at doing. We're going to become the key venue where we will be able to print market data with very high integrity from which trust can build in the system, and the whole lift the boats all together, raise the quality bar, and get the crypto industry much higher, much further down the road to maturity.
Yeah.
The benefit of all, actually, really.
Yeah. And are you focusing just on Bitcoin when you launch? Are you seeing demand? How far across, like down the leaderboard of top cryptocurrencies are you kind of going, or what demand are you seeing?
I think Bitcoin to start, and maybe say the top 5 by market cap from there. But we are quite flexible and dynamic, so it really depends where the interest and where the demand is from the banks, their underlying clients.
Yeah, I mean, there's good firm interest in stable coins, for instance, and as I mentioned earlier, CBDCs as well. So Bitcoin, yeah,
it'll probably be a while, but
yeah, the efficiencies of a stable coin are remarkable for the FX industry, actually. So there's loads of use cases there too. It's a very exciting world. It's really refreshing for me coming from FX, which is a little bit stale. Fresh young minds and fresh opportunities for everyone.
Yeah, and I guess, again, part of this relational reason behind the partnership with State Street is that, I guess cryptocurrencies and traditional currencies should ultimately be sitting side by side on traders' screens in the not too distant future.
The same way as gold sits on screens of FX traders.
Mm-hmm.
It's more of it's a cross between a commodity and a currency, really. But it's interesting itself because it's hard to define exactly where it sits inside even the bank. Some banks are confused about whether it's an equity, whether it's a commodity, or whether it's a currency. Mm-hmm. It's a mixture of all three, really. It's really fun to see everybody juggling the sort of understanding of it. It's creating its own niche.
Yeah, absolutely. Well, the market's definitely a lot more educated, I'm sure, from when you started having conversations with the guys a couple of years ago. They're certainly more educated now, so I think that's a good sign and proves that the interest is real. And I'm sure with solutions like yours, it's another step closer to making it a reality as well. So it's been great speaking to both of you today. Thank you for taking the time, telling us all about it, and we wish you both the best of luck for the coming months as you roll the platform out.
Thank you very much, Paul. Thanks for having us.
Thanks a lot.
You're welcome.